Hi there, welcome to Kneppy Invest and welcome to the 14th of August 2025. Time is currently 2:22, so about an hour and 47 minutes left of trading today. Yes, the time is 2:22, and whenever I see that sort of time, I think of Richie Benno, but maybe that's just me. Okay, so I have started recording this video a little bit earlier than I probably usually and would want to, but I just finished recording another two banked videos. One of those banked videos was on the chart of the day, Chipotle, and the other banked video was on a really interesting thought from VB Ed in regards to the nature of the market. Sort of comment that I had to think about it. So there's no harm in trying to think. In fact, I do believe that critical thinking has become less prevalent in the world. Yes, that's just me. Maybe that's just me. Okay, now on to the agenda for today's video. Nothing before we look at the ASX today, and a pretty good day for our market. Pretty good day for our market, but no surprise there because I'm pretty sure Dow Jones had a pretty good day. And then we'll have a look at the top 5 stocks of the day. The stock of the day for me is a no-brainer. In fact, this is the first time I've had a look at the expectations of the market before I had a look at the results. And the reason I did that is because I'm a shareholder of this company. And in my opinion, this is one of the, if not the highest quality company on the ASX. And you have to pay a pretty penny for this company. Of course, that's Medicus. So for me, that was a no-brainer stock of the day. No shock to share price, was up about 5 or 6%. And the other companies in the top 5 all released results. And in fact, all had good days. So no negative results today in the top 5 anyway. And then we'll have a look at the chart of the day, which I've already mentioned is Chipotle. Okay. So let's have a look at the ASX today. So pretty good day. I can't remember exactly the lead in. I'm pretty sure Dow Jones was up, but maybe the Nasdaq was a little bit down. Let's just verify that. Nasdaq was flat. We'll say flat. Up 0.04%, and the Dow Jones was up 1.04%. So no surprise, we are up. TSX was up 0.26%. So we've had a better day than them. But the biggest company on the TSX is Shopify, and that is significantly different than our biggest companies. In fact, it's so significantly different that my thoughts that the TSX is a close cousin to the ASX, I think it's true. They are a cousin, but maybe not a close cousin, just because of Shopify. Okay. Anyway, so no surprise, we're up today. And another reason it's no surprise is because of one of the biggest companies on the ASX. They released an interesting update. Like I think it was a Q3 or third quarter update, and this was a bank. And I looked at the results or this announcement from this bank, and I went, "Oh, that's actually pretty good. Pretty good for a bank." Pretty good for a bank. So it's a little bit surprised because yesterday CBA went down on their results. So I'm just going to have a look to see if CBA share prices bounced. No, it's actually gone down again. And so maybe there's a bit of rotation out of CBA into some of the other banks. Maybe. We'll have a look at that later in the episode. Anyway, and even though NASDAQ was virtually flat, Tech's had a pretty good day, up 1.06%. And I'm wondering if that's because of PME. Is PME or Pro Medicus considered a tech company? I would have said it's a healthcare company, but sort of tech, software, that sort of thing. And a negative day for mining. Okay, I didn't even have a look at commodities this morning. I usually do. Okay, now on to the best performing sectors, utilities and financials. Had a really bad day yesterday, and now nice little rebounds. So sentiment didn't last, or the negative sentiment in both of those sectors didn't last long at all. And a pretty bad day for telecommunications, and I'm pretty sure that's because of Telstra. It's really interesting because there was an email I read this morning. I think it would have been AusBiz or Market Index, and the blurb about Telstra was their profit was up something ridiculous. And I'm just thinking to myself, no, it's not real profit. It's not the real profit. It might be reported profits, but it's not the real profit. It's not how Telstra had performed. I'll just show you. Telstra's share price is down. Yeah. So if you have a look at their, what we have a look at, was it the media release? I'm pretty sure this one, was it this one? Hopefully this is this one. Yeah. So if you have a look at their profit, up 31%. Telstra's profit up 31%. Reported profit, statutory profit, but the real profit, the underlying profit, was only up 1.8%. That's a big difference. EBITDA up 4.6%, earnings per share up 12%, which is actually quite nice. Return on invested capital flat at 8.5%. So straight away, just based off return on invested capital, this is not a high quality company. And we already know that because share price of this company has gone nowhere over the last 25 years. And the reason why earnings per share has gone up is because of the share buyback, which I'm not sure they should be doing because this company is really overvalued, in my opinion. But anyway, I find it really funny that most media releases are just, or like media platforms, just look at the reported profit and that's it. And if you just focused on the reported profit, you'd say, well, Tesla had a great year, but it did not. And you can just see that by the share price. It was maybe slightly worse than expected. Maybe, I don't know. But anyway, that's what was I talking about before? That's why telecommunications had a bad day today, because Telstra's down. Banks had a good day, mostly because of Westpac. We already saw CBA down. So Westpac, I'm assuming, is up by 5 to 6%. ASX 20's had a pretty good day, and gold's had a good day, even though mining's not. So let's have a look at the ASX 20, and we'll confirm how Westpac has performed today. It's between Pro Medicus and Westpac, which is the best performing ASX 20. I'd say 13 companies up, 7 down, 12 up, 8 down. And if we have a look at the best performing companies by market, funny enough, the two biggest companies on the ASX are both down. Then we have CSL up 0.94% and Westpac up 6.25%. So that is in my top 5 stocks. And yeah, I read it and went, well, it's pretty good for a bank. Telstra down 2.61. Is Pro Medicus even on here? No, it's not. Sometimes Pro Medicus is on this list, sometimes it's not. I thought maybe today it would be. Rio Tinto's down, so obviously iron ore's had a bad day. And there's QBE down again. I'm trying to have a quick look at QBE because I did sell out of my trading position with QBE. And I'm just seeing if, yeah, I'm out. So I'm going to get rid of these lines. I'm doing that on the fly. Yeah, and that was just an automatic sell for me when they release the results. Automatic sell. Okay. Actually, it wasn't on that day. It was the next day because I didn't see any bounce. I was just wanted to see if there was going to be a bounce. No bounce, however. All right, let's go back to, what can we do now? Anything interesting here? Nope. ASX 200 flashes overvalued warning as key market indicator crosses danger level. This could be a good bank video because I'll be releasing this 2 months from when I'm recording it. So you'll be able to see if this sort of key market indicator was a sell sign. So I'll just open this up and maybe I'll do a banked video on this. Okay, so it's from Carl Capolingo, so that's interesting as well. Okay, now on to the top gainers and top losers. Now, the top 5 stocks is full of companies that released either results or for Westpac. Actually, even Westpac was a result. It was the third quarter result. But I completely missed the top performing company of the day. In fact, maybe I missed the top 2. Activeport, share price up nearly 80% on pretty big turnover. OD6 Metals, I'm just going to quick look at this, even though I shouldn't be doing it. Did they release something 13th? Yeah, that was yesterday, so we can move on. Yeah, Activeport, ATV, share price up nearly 100%. And I completely missed this. And I don't know why, because this was a really interesting titled announcement. I sort of know why, because share price now up 90%. Because I was just trawling for results. And sometimes when I'm looking for results, I intend to focus on results. I tend to miss other potentially interesting announcements. And just the title of this announcement just made me go, ooh, interesting. So Activeport unveils first Australian private cloud superhighway. Now, I'm not sure if this is going to be financially or significantly financially benefit for Activeport, but it's a pretty interesting titled announcement. Now, I'm not sure how good this is going to be, but it just sounds really cool. Really cool. And they also said they immediately signed new customers. Now, how much are they paying these new customers? But it's really interesting. The first 3 customers hosting their private cloud services in leading data centers, including Digico, Equinix, and XDC, or NextDC. So that's a pretty good first 3 customers. I can definitely see why the market is excited, but we just don't know. We just don't know. We just don't know. So it just there is. I mean, the potential upside here is actually quite significant. So I think that's what the market is doing right now. They see that potential upside. Now, the company may not realize that potential upside, but they see it. So I'd say the people buying this particular company on this news are more risk takers than not. If you're not a risk taker, if you're risk averse, you wouldn't be in this at all. But there's definitely potential here. Definitely potential. Accessible launch and rapid early take-up of its groundbreaking Private Cloud Connect, a layer 2 fiber-based network as a service offering high-speed data communication ports with variable bandwidth on-demand software orchestration, connecting branch offices to private cloud services hosted in Australia's leading co-location data centers. So most of that just goes over my head, but that's okay. Doesn't matter. Digico, Equinix, and NextDC have to like it. And it seems like they might. So let's have a little chart for Activeport. Is this a breakout? By the way, this company does release Appendix 4Cs. So let's have a look at this most recent Appendix 4C for the company. It's a fairly small company. Market cap is 11.68 million, even with the share price jumping today. So before today, not much interest in this company. If you have a look at the cash receipts, 2.4 million, and only operating cash flow negative by $779,000, not $1 million. And they are burning through cash, not cash flow positive or free cash flow positive. So not really on my radar until maybe today. Maybe today. So let's have a little chart. And this chart is definitely of interest. This chart is definitely of interest. The massive volume coming today. Share price has been a long-term downtrend. So this could be the signal that the low has come in. Now, I'd just probably like to see some financial proof that this is going to be financially lucrative for Activeport. It may not be that financially lucrative. We just don't know at this point. But you know, already see in TradingView, share price is up 111%. If we go, it's really interesting. TradingView says share price is up 111%. And Comsec says it's up 90%, even though the share price is the same on both platforms. There you go. That's okay. That's okay. By the way, the share price was at 1 cent before this today. So now the share price is more like 2 cents. So I would be interested in this. And the chart is interesting. The chart is interesting. We just don't want to see the share price sell off. We don't want to see the share price get to 1.5 cents during the rest of the day. And let's just have a look. It could, because the next time there's a trade, I was going to say the next time there's a trade, share price will drop because there was a lot of sellers at 1.8. So there already could be a little bit of oomph coming out of the enthusiasm of the buyers right now. Okay, apart from Activeport, nothing much else here I'd want to talk about. You can see some companies like Dateline Resources up on fairly big volume, but I can't remember if they released anything, and they've been fairly hyped up stocks recently. Top gainers by market cap, Westpac, Templar Webster, both in my top 5. Electro-Optics, still a lot of hype in that sector. Electro-Optics share price or valuation now 1.2 billion. It's getting a little bit silly. Servcorp up 8.5% in my top 5. And Austin Engineering did release something yesterday. Share price up 7.26%. But the chart doesn't look that good. And that's it. Top losers. Who did I put here? Okay. Centurus Metals capital raising, Orbital Corporation. You can see Electro-Optics up a lot, Orbital down a lot. So this chart of the day, yesterday, I said, there's no way I'll get into Orbital Corporation. Share price has gone exponential. When I see that, eventually you're going to see the share price tank, and maybe we've seen the first signs of that today. And what else? There was nothing else here. The only thing I was talking about was Korvest. Share price down 10.36%. And there is a reason behind that, which I'll touch upon in a second. And I could talk about Vista Group. The share price, I'll talk about that. I'll just briefly mention Korvest did go ex-dividend today. That's why the share price is down. And that's why I was looking at the Korvest chart before I started recording. Now their dividend was 50 cents and the share price is down $1.50. So I'm not sure why people will be selling at this low level. You can see the share price went on a massive run. So there might be some dividend, income investors bought some shares, but why would you sell at $1.50, at $1 less than the dividend, because you're actually losing money. You're actually losing money. It doesn't matter about the income. You're actually losing money because, again, dividends aren't for free. So I find that really interesting and strange that you would sell at a price that was significantly bigger than the dividend you received. But that's why the share price is down. It doesn't bother me at all. It doesn't bother me. In fact, I'm more likely to buy some more shares, if anything. But the other company was VGL. So they did release half-year results. This chart was looking really good. And I looked at these results because the valuation of Vista Group is really high. It's like 700, 800 million. Last time I looked, 800 million maybe, or 700, just below 700 million. Oh, the share price has dropped 6%. So I looked at these results. I just wanted to see how this company is performing. And my first inclination, and in fact, this happened a lot today. I had thoughts about these results, a lot of these results that were released today, and there were a lot. And I was right. My first inclinations were quite spot on for a lot of these companies. And for Vista Group, I was actually a little bit negative about this. Now, the company is growing. So revenue up 11%, recurring revenue up 11%, AR up 13%, EBITDA up 39%, still loss-making, operating cash flow of 14.1 million, up 11.1 million. But again, this company has a market cap of $700 million. So I just want a little bit more growth, I think. A little bit more growth for me. And the chart is starting to look a little bit negative, I think, because it looked like the share price was trying to turn around. You can definitely see it. In fact, we've had a moving average crossover today. So maybe the uptrend has come to an end for this company, which, it's been trending up for a while. In fact, the share price has doubled since the start of 2024. Okay, so maybe, maybe a bit of a downtrend now, or maybe a consolidation period for Vista Group. Okay, now on to the top 5 stocks of the day, starting off with Westpac. Maybe it should be higher up on the list. Share price up 6.12%, which is quite significant for a bank. They released, third quarter. And all I did not look at their investor discussion pack or their Pillar 3 report. I just looked at their 3 or 4-page update for the third quarter, and I went, oh, this is actually pretty good. Pretty good. In fact, I'm going to see if I did not have a look at Cover Brief before I start recording, which I should do, because sometimes. I didn't even. You know what else I did not do? I did not have a look. I'm going to pause looking at Westpac. I did not even have a look at any announcements released after 10 a.m. because I just saw Bell Financial Group release something. So I did not look at. I looked at Servcorp, and that was it. I did not have a look at High Tech Group, WAM Capital. So High Tech Group's only up 1.35%. Bell Financial Group, share price flat. So the market already knew that. So it doesn't really matter. There you go. So it doesn't really matter. So let's go back to Westpac. And I'm just going to see if there's any mention of Westpac. Oh, there we go. There is something written about Westpac in this. So just because I have feelings about her as any sort of announcement doesn't mean I'm going to be spot on. I could be completely mistaken. But I thought this sounded really good. So we're talking about unaudited statutory net profit up 14%, but this is statutory, may not be underlined. Unaudited net profit up 8%, and the CET1 net capital ratio above target operating range of 11 to 11.5% at 12.3%. This quarter, we delivered a sound financial result while executing on our strategy and priorities. Okay, so straight away, I was thinking, this actually looks pretty good. There's a bit of a financial summary. Everything was up nicely for a bank. Anyway, so I had very positive vibes about this particular quarter 3 update from Westpac, and it seems like the market has as well. And in Capital Brief, they just mentioned Westpac shares rise on quarter 3 result. UBS predicts consensus upgrades. There you go. That's actually really important. So it looks like fund managers are going to look at this result and say, hey, we have to upgrade our model, not upgrade our model. We have to update our model, and then the model will spit out a higher fair value for Westpac. Let's see what the analysis said. John Story said the result showed strong net interest margin, which I actually didn't look at, and controlled bad debts, positioning the bank well from consensus upgrades. The bank would need to achieve Q4 profit of 1.4 billion to meet full-year consensus forecast, compared to an average of 1.7 billion delivered in year to date. So there is a chance they will beat full-year consensus forecast based off that. He said consensus upgrades of 2.8 to 6.2% are likely after today's update. There you go. Funny enough, he said similar to CBA, Westpac appears to have a strong trading income performance in Q3. Overall revenue is tracking ahead of UBS and Visible Alpha consensus. Still not have a look at what Visible Alpha is. Okay. So yeah, it's pretty good. Pretty good for a bank. So let's have a look. And by the way, I don't think Westpac is nearly as overvalued as what's the other one? CBA. I'm just going to have a very quick look at CommSec. 16.58 P ratio. I would prefer that to be like 11 or 12 for me to be overly excited, but it's nowhere near as bad as CBA. So let's have a look at the chart. And the chart doesn't look half bad. Again, if this was a chart for a company, for a bank with a P ratio of say 10, 11, I'd probably trade it. I'd probably go in. But this chart is not half bad. It's a nice looking chart, Westpac. I don't think I will take a training position, but this is the sort of thing I'm looking for every single day. So maybe my bias is going to work against me. Okay, coming in number 4, we have Servcorp, some sort of real estate company. Share price up 8.91%. I can't ignore this when the share price is up 8.91%. Plus the chart looks pretty good. For some reason, I've always thought of Servcorp, I could be completely wrong, as sort of like was that company called WeWork? Like you could rent out their little office spaces in the city or somewhere, but not for the long term, just for like a day or for a short period of time. I could be completely wrong. What does Servcorp do? I'm going to actually ask ChatGPT. Servcorp office space, co-working and virtual office solutions. Yeah, it looks like that's sort of what they do. World's finest office and co-working spaces. Premium service offices, virtual offices, co-working and meeting rooms. I'm not sure what virtual offices is. Is that just co-working space? Hot desking, yeah, hot desking, dedicated desks. You're not sure dedicated desks. I think of hot desks, virtual offices, something like that. Like you don't need an office full time. You just want to virtual office. Oh, what is a virtual office? First introduced by Servcorp more than 4 decades ago, virtual offices create a credible presence for your business anywhere in the world without the cost of a full-time physical office. Yeah, work remotely or from our in-town business lounge and still benefit from a powerful in-town business address and office services. Yeah, so that's what I thought they sort of do. And I definitely can see that sort of thing becoming more and more popular over time. I'm not sure why you want a permanent office unless you need to be physically there every single day. And I don't think people need that. A lot of people don't need that anymore, or workplaces don't need that anymore. Anyway, yeah, definitely see the benefit of this, and looks like they're doing fairly well. Okay, so let's have a look at their results. So this was one that, yeah, so what I usually do is I write down the ticker code of the company that releases an announcement, and then I circle it if I think the reaction from the market's going to be really good or really negative. And today I circled quite a few because I wasn't quite sure, and Servcorp was one of those companies. So I thought there was going to be a good reaction to this one, but again, I don't know. So let's have a look at their results. And it's really good. They do have underlying profit, underlying free cash. That is the right metric. Now, it's very different to reported. Reported could be anything. But underlying profit up 23% to 69.1 million. Underlying free cash up 17% to 84.9 million. I'm not sure what underlying NPBIT is, net profit before interest and tax. Up 23%, underlying free. I think that's the same thing as underlying profit. Dividend 14 cents. Total dividend 28 cents, up 12%. So really nice. Earnings per share up 35%. NTA of 217 up 22%. So that's so it's not a true real estate company where you just look at the NTA. Okay, so straight away I looked at it and went, it's pretty good. Their outlook was okay, nothing wrong with this. In fact, they guiding for more growth, 7% growth, sort of at the midpoint. So yeah, what can I say? Pretty good from a Servcorp. And then I had a look at the chart. I went, oh, what a chart! What a great chart for Servcorp. It's yeah. In fact, I still remember this share price breaking out on the 16th of November 2023. Share price up 12.9% on the day, and you can actually see the share price going sideways for the next 2 months. That's a great signal. That's an amazing signal. I wish I was paying a little bit more attention to this company back then, because at that point you could have bought at 335 and almost doubled your money. But this chart's looking really good. Still looking good. Okay, so that's Servcorp, and I'm just wondering if Reith mentioned anything about Servcorp. I doubt it because they are fairly small, although they've mentioned Articore, which is a small company, and let's have a look. I wonder if I can search. No, can't see it. Can't see it. Okay. Coming in number 3, we have Temple and Webster. This is one company I was trading, and then I got out. And the main reason I got out was valuation reasons. Mistake. Share price up 8.17% on financial year 25 results and trading update. I still think this company is sillishness overvalued, but I think that's probably a bias. And I still don't understand why people buy furniture from online. I always think when you buy furniture, you should go actually see it physically in person. But that is maybe me showing my elderly side. I don't know. Anyway, so nice growth. Revenue up 20.7%. EBITDA up 43.2%. Free cash flow up 89. Everything's up. Everything's up. But it's not that it's up. It's how these results compare to expectations. So either these were better than expected, or their trading update was really good. And the trading update was pretty good because they mentioned revenue at the start of for the first 6 months or 6 weeks. It's about 6 weeks. The revenue for the first 6 weeks of this particular financial year is up 28%. Home improvement continues to outperform. So it looks like they have continued their momentum into this particular financial year. I'm pretty sure we did see they're mentioning Temple Webster somewhere here. Here we go. Temple Webster shares surge on 5-fold full-year profit again. So you can see someone, again, media just focusing on the profit. That's not the thing you should always focus on because the profit last year was really low. And when I say low, I mean the base was like $1.6 million. I think it was 1.6. Let me have a look. Yeah, 1.8. So when you go from 1.8 to 11.3, it looks really massive. You go, wow, what an increase, but it's a low base. They won't do that again. Anyway, so let's have a look to see if any analysis said anything. So RBC, Wei Wang Chen, good result that reveals both growth and margin expansion, something I didn't look at. Chen flagged that EBITDA profitability was 5% ahead of market expectations, and financial year 26 guidance is consistent with market expectations. So it's just that this year was a little bit of a beat, not much, was a little bit of a beat. He also noted that revenue is up 28% year on year in the first weeks of financial year 26. Okay, let's have a look. We've got some more visible alpha stuff here. So the market consensus for profit was 12.1 million. It came in a little bit lower than that. Consensus for revenue was 606 million, and it came in just a little bit lower than that. So a little bit lower in both of revenue and profits. So you might have expected share price to be down. So again, maybe just like Nick Scali, maybe it was just how the companies performed for the first 6 weeks of the financial year. Now let's have a look at the chart for Temple and Webster. And this is a case where I just let my valuation of a company get the better of me. So I thought this company was overvalued, but this is a beautiful chart. In fact, I bought, when did I buy? I bought on this little breakout last year on their results. Share price was $12. I bought on that. Took ages for the share price to go higher. And I forget when I sold, but yeah, the share price has more than doubled. So I do think there is valuation, I wouldn't say concerns, but I wouldn't say this company is cheap. Okay, now on to company coming in. That's number 2, Orora. I'll be honest with you, I don't really give much thought to Orora. Zero thought. And this is another case where I saw the results and I was thinking, look, maybe I should delve a little bit deeper into Orora, because I thought on initial glance, these results were pretty good. Now, they've made an acquisition. So because they made an acquisition, a lot of their numbers are up a fair bit because of the acquisition. So, and also, if you have a look at statutory profit, 973 million, up 425.4%. Come on. Yeah, it's not, you can't look at that. And I'm pretty sure that some media sites are reporting that. Orora, profit up 400%. Wowzers. Capital Brief is not one of those because they have not even mentioned Orora, which is shocking. In fact, if you put Orora news, let's see if that is mentioned. Oh, no, they didn't. Orora reports 4-year profit surge. They did have a little report. Aurora's statutory profit up 425%, higher than the 185.2 million reported last year. Now, the market consensus estimate for statutory profit was only 880.9 million. So this was a massive beat. Revenue at 2.1 billion, in line with expectations or consensus estimates. There you go. Anyway, so what excited me about this? Earnings per share. Now, they've made an acquisition. They've actually mentioned this acquisition. Revenue increased 24.4%, reflecting 12 months of contribution from Saverglass compared to 7 months in the prior corresponding period. So looks like they made this acquisition more than a year ago, but they've seen the benefits of this acquisition in terms of revenue in this year. Now, I'd love to see a pro forma. And they might have done a pro forma, but it didn't delve too deeply into this particular announcement. Earnings per share up 11.1%. So there was a lot of things to like about this. But again, because they made an acquisition, I'd like to see some pro forma stuff here. Now, in the financial year 26 outlook, EBIT is expected to be higher than financial year 25. Volume growth is expected to be consistent with long-term growth rates, which supports stronger EBITDA. Now, the other thing about this company, I don't think they're that overvalued either. I think they're quite cheap, although you can't really look at the P ratio, 17.72. So markup 2.7 billion. And if they made a profit of 900 million, that means the P ratio is 3. So obviously they had a one-off in this particular year. So let's have a look. Let's have a look at the financial results. So now I'm doing this on the fly because I didn't delve deeply into Orora, but I took notice of that. So there might be a one-off in these results, and this is why sometimes you should have a look a little bit more deeply. So I'd like to see an underlying profit. Oh, wait there. Here we go. So net profit after tax, statutory 973.1 million, continuing operations 151.1 million. So that is the number you should be looking at, and that was up 18%, which is still pretty nice. So 151.1 million, which means the P ratio of this company would be like 17, which is actually what Comsec says. Okay, so yeah, a little bit more clarification now. So they must have sold something, did they? Did they sell something? I have a feeling they did. I have a feeling they must have. So they're just talking about beverages here. It looks like glass, beverages, Saverglass. And I'm pretty sure this company was much bigger than that. They also had other packaging. So they must have spun something out or sold something, which would make sort of sense based off what I'm looking at here. Anyway, the market liked it. The market liked it. So that's the most important thing. The market liked it. And more importantly is the chart. And this one actually popped on my radar not that long ago. Yeah, it popped on my radar not that long ago as a potential. Keep an eye on this one. And I thought maybe this could be a breakout, very close to breakout. Now, the share price has pulled back. And the reason why this is at number 2 was because the share price was up probably about 7 or 8% earlier in the day. And that would be a breakout. Now, the share price has pulled back a little bit. So a little bit of selling has come in during the day. Not massive volume either. So not my favorite chart in terms of the price volume action today, but a potential breakout for Orora. Now, if you have a look at the weekly chart, it's a big no, but anyway. Okay, now we have now we get to the stock of the day. Medicus, share price up 6%. 6.41%. Okay, so I did have expectations. No, I didn't have expectations. I knew the market consensus when it came to Medicus before they released their results. And funny enough, I came to my computer at about 8:45 and I opened up ComSec. And in ComSec, it opens up to my watch list and it has the indicator price before the market opens. And I saw Medicus was down 4.5%. And I was like, oh, dear no. They've released their results because I knew they were releasing results today. And I thought, oh, their results are bad. It's below expectations. So I thought, oh, crap. And then I went to look at the results and they hadn't released at that point. So I was like, okay, this is meaningless. And so I was waiting. And finally they released their results. Probably one of the last companies to do it in terms of what I was looking at or looking out for today at about 9:20 a.m. Open it up. And first thing I should mention, in fact, what I'll do is I'll go to Morgan's calendar because they do have the consensus in this. In fact, this is where I got it from. So their consensus, revenue 213.8 million, earnings per share 108.9 cents. So keep that in your mind. In fact, I'm going to write it down for myself. So revenue 213.8 million and earnings per share at 108.9 cents. Okay, so they also have their own guidance, which is a little bit different. So keep those numbers in mind because I had those in mind when I looked at these results. Okay, so I've mentioned this time and time again. The share price performance of a company is determined by how much the results compare to expectations and also any sort of outlook. And in fact, we saw this with Nick Scala last week. I think it was last week or the week before. Nick Scala's share price went up significantly, even though the results looked a bit meh. It was all because of their outlook and how their trading update. Okay, so let's have a look at Medicus. And again, in my opinion, this is one of the highest quality companies on the ASX, if not the highest quality company. Okay, so revenue, 212.98 million. So slightly below expectations. It did rise 31.9%, but slightly below expectations. Now, profit 115.2 million, up 39.2%. Now, this is really important. So revenue up 31.9%, profit up 39.2%. So straight away, margin expansion. The margins have improved for this company. The margins have improved, and that's very important because if you have a look at the earnings per share, is in this one they have the earnings per share? No, you have to look at the next one. You have to look at the annual report because they were slightly amiss in revenue, and I think we already know that they beat earnings per share. I sort of given it away. So that was, when I saw that, I went, ooh, a slight miss with revenue, or the share price might go down. Maybe the market was right. But if we have a look at their earnings, and I did see that profit was up more than revenue, but that does not necessarily mean earnings per share was going, because the market could have been expecting margins to expand as well. Anyway, so this is where it's really important. Earnings per share in the profit and loss statement, 110 point. We'll say 110 point, or just above 110. So remember, the consensus was 108.9. So earnings was higher than expected. That's all it takes. That's all it takes. sometimes. And no surprise, the share price is up. There was also the CEO interview. I read that and I was like, who was the interviewee? But there's a really good point. They've made or signed a lot of deals in the last year. A lot of deals. So this company should grow significantly in the next few years just because of these deals. And they've only have 10% of the market. They only have 10% of the market. So there is still a lot of potential growth for this company moving forward, which is really interesting because a few years ago, what's his name? The Team Invest guy. He does like Team Invest, but he thought there was going to be a lack of growth moving forward for Pro Medicus because they had too much market share and the growth in market share was going to slow down. But I think he got it wrong. I think he got it wrong because I think he thought Pro Medicus had more of a market share, but only 10% at this point in time. So definitely more growth. So no shock the share price is up 6.5% because this was a beat. Earnings per share was a beat. And if you do have a look at, did I close it? No. Or did I close it? I think I closed it. If you have a look at the Morgan site, they also have financial year 26 expectations, which is important as well. So they are expecting revenue to be 290 million. So that's a pretty big increase from 213 million. And earnings per share up to 152.4. That's a consensus. So that's another really big increase in the revenue and earnings of this company next year. Now, in saying all that, you can see in Morgan's little blurb here, a strong result expected, but is it priced in? You do have to pay a pretty penny for this company. The P ratio, just think about this. Earnings per share, 110. The price of this company is 316. Well, the P ratio is like 300. 300. So you do have to pay for this company. But, and we've seen a lot of experts who love this company have sold out, and some of these experts have sold out at a much lower price than where it is today. In fact, when I bought Pro Medicus 2-3 years ago, so almost 3 years ago, at $55.25, I thought it was significantly overvalued. And even on the earnings today, that's a P ratio of 50. So that is what can happen. Even though you think it's overvalued, the company can grow so significantly that eventually, when you bought in, it looks cheap. I still remember buying, going, look, I want to own Pro Medicus. I think it's overvalued, but I'll buy some shares. And if the share price pulls back, I'll just buy some more. It did not pull back. It just kept on rising. Anyway, so that's Pro Medicus chart. You can see a nice little rally today. Oh, the share price actually opened up lower. I'm shocked with that. Oh, yeah, it opened lower on the first minute. What were people thinking? We've seen this a lot. There was a nice little comment. So that's it about Pro Medicus. There was a nice little comment from Trader Hooper. Here we go. I haven't watched half and full year reports so closely before. It seems that every day there is at least a couple of companies, often more, that open up and close down or vice versa. Some of the reports are obviously good or poor, but many are not so clear. And we've seen that with Pro Medicus today. I thought it was good. Share price opened lower and then the share price rallied. And we have seen that so much. That first minute of trading, the market gets it wrong, and then we see either a rally, a really big rally, or we see the share price drop a lot. After that first minute, it's always that first minute. And there's that old saying that the amateurs open the market and professionals close it. And I've never really I've never really given that particular saying any credence. But on days like this or situations like this, there's some truth to it because obviously someone saw these results and thought, oh, that crap, I should sell. But the overall market said, no, these results are good. And we've seen that a few times now with different companies. Share price goes up on open and then drops a lot, or down on open and then rallies a lot. So my number one rule is never to buy on open unless I'm 100% sure. Even then, I'm not so sure. Okay. So there we go. Threw in a comment. Okay, now onto the chart of the day. So I just recorded a video on Chipotle, and last thing I did was look at the chart, and I went, oh, hang on a minute. This could be exactly what you're looking for a high quality company. So the first thing I did in that video was I tested to see if I would consider Chipotle to be a high-quality company based off my own Rule of 10 system to determine whether a company is high quality. And I determined, yeah, Chipotle is a high-quality company. I think just barely. And operating margins was the one little thing which could push me over the edge in not calling this company high quality, because one of the things I'm looking for is operating margin, 5-year average above 10%. They've done that or achieved that last 3 years. But before 3 years ago, this company really struggled with operating margins. Anyway, so this is Chipotle minute. Oh, this is their 1 minute chart. I was going to say this is wrong. Anyway, so I said or stated, I think this company could be considered high quality, but they have had their problems in the past, including a poisoning scandal, a food poisoning scandal. It was 2015-16, and the share price pulled back a lot. I do know some investors who bought in during that pullback. Market was overreacting, yada, yada, yada. But since then, the share price has gone bonkers until recently. So let's have a look at the weekly chart. And what we'll do is we'll have a look at the weekly chart plus the 200-week moving average. And we know that thought that if you buy high quality companies when the share price is at the 200-week moving average or below, you are going to significantly beat the market. If you don't believe me, if you buy high, this is attributable to if you buy high quality company, attributable to Charlie Munger, and I don't think he said it, at 200-week moving average. So Charlie Munger once said, if all you ever did was buy high quality stocks on the 200-week moving average, you would beat the S&P 500 by a large margin over time. I've tried to find where Charlie Munger said that. It just doesn't seem like a Charlie Munger quote. So I believe someone else said it, and then they just said Charlie Munger said this. And you can actually see, without even mentioning Charlie Munger once said it. Charlie Munger said it in Reddit. Charlie Munger strategy in NASDAQ. Even the NASDAQ has it. Using 200-day moving average, blah, 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 blah. Anyway. And after I did read that a few years ago, I've looked at it and I went, there's some element of truth to it. If you just look at high-quality companies, you will see on occasion share price pulls back to 200-week moving average. Now, it's not absolutely perfect. And a lot of times when the share price pulls back to 200-week moving average, that's the time to buy. And with Chipotle, if you go back to 2017, so you can see that little bit of trouble during that food poisoning scandal. Share price was below the 200-week moving average then. Then it got above the 200-week moving average in early 2018 and typically has stayed above that particular moving average except during the COVID-19 financial panic. It touched and bounced off the 200-week moving average in June 2022. And right now it's below. So if you consider Chipotle to be a high-quality company, now could be a good time to buy into this company. That's all I'm going to say. Okay, that's all I have for this look at the ASX today, 14th of August 2025. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.